Gold has had the best year between conferences since I can remember. I remember at the last conference, there was a lot of discussion about whether or not gold would make it above 2,000. I was one of the people there that thought that it would. Of course, I wasn't the only one. It was a gold conference, so there were people that thought gold would make it above 2,000, but it was below 2,000. And between that last conference and this one, we've had this explosive rally. You would think, oh, there'd be a lot more excitement, a lot more enthusiasm, but not really. I mean, I really couldn't tell much of a difference between the environment this year and the environment last year. I mean, there's just not a lot of excitement yet in the gold market, despite the fact that gold actually rose almost 4% on the week. It closed at 2,715. So back above 2,700, we're only about $35 below where we were when Trump surprised the markets, or maybe not surprised them, but Trump won, and that inspired a big rally in the dollar and a decline in gold. Well, gold has almost recovered all of that. In fact, if you look at its record high from a couple of weeks earlier, we're only about 2.5% below the all-time record high for the price of gold. And if you measure gold in euros or in British pounds, as a lot of people obviously do, because there's a lot of people that live in Europe or the UK, gold closed at an all-time record high in those currencies. And remember, gold was making all-time record highs in foreign currencies before it eventually started making all-time highs in the dollar as well. And I expect that to be the case. It's just lagging a bit due to the strength of the dollar. In fact, the dollar closed the week at about a 3-year high, I think, in the dollar index. It closed at 107.5. The euro is barely holding on to a 104 handle. It got to as high as 112 not too long ago. And the entire rally in the euro is based on Trump winning. Now, I know we got some weak economic data coming out of the Eurozone last week, especially on Friday. The PMIs that came out were particularly weak. But, the U.S. PMIs have been weak, too. And so I don't think it's really the weakness in Europe. It's the expected strength in the United States that traders believe will be in sharp contrast to what's going on in Europe, because we've got Donald Trump and people assume we're going to have a stronger economy. We're going to have faster GDP growth. Maybe he's going to shrink the deficits. We're going to have a stronger dollar. In fact, people think that tariffs are going to lead to a stronger dollar. I disagree, but that's what the markets perceive. So you're getting this strong dollar. But I think the markets are also overlooking a big factor, because the currency markets, I think, were still trading before Trump won under the false narrative that we had a strong U.S. economy, that we had the strong labor market. And that was part of what was underpinning this dollar, because there was a perception that the U.S. economy was in better shape than the rest of the world. And so the Fed would not cut as aggressively as maybe the ECB or the Bank of England or other central banks. But that was a false narrative. The fact that Donald Trump was elected in and of itself strongly suggests that that was a false narrative. Because if the economy was as good as the markets believed, Trump wouldn't have won. They would have elected Kamala Harris. The fact that they voted for Trump is an indication that the voters were not happy. The number one issue in the campaign was the economy. And because Trump won, that means the economy was bad. If the economy was good, Trump would have lost. But it's not just that. They're already starting the downward revisions, and nobody noticed. I know that Scott Bessent has reiterated his belief that the U.S. dollar should stay as the reserve currency. Now, of course, he's not going to say the opposite. I mean, it'd be ridiculous to say the opposite. But I think the markets are probably going to take that to mean, oh, well, I guess we're going to have the strong dollar policy, a return to the strong dollar policy. But we never really had a strong dollar policy. Remember, it was really rolled out, I think, under, was it Clinton, where we first had the strong dollar policy? I mean, it was a long time ago. Yeah, maybe it was Bob Rubin. But the strong dollar policy was basically repeating the mantra that a strong dollar is in the national interest. So every time the Treasury Secretary spoke about the dollar, or he was asked about the dollar, the response would be a strong dollar is in the national interest. And that was the strong dollar policy. I mean, that was basically the extent of the policy. But for some reason, it worked, right? Even though we didn't actually do anything, supposedly we had a strong dollar because of this policy. I used to joke about, I think I wrote something about it in my first book. I think I remember saying, talking to a student, and he cuts classes, he smokes pot, he doesn't study, but he tells his teacher he has a straight A policy, right? And so like I should get A's because I got a policy that says I get A's, but you don't follow through with it in your study habits. Well, the whole time we had a strong dollar policy, everything we were doing was undermine the dollar. We were running big trade deficits, big budget deficits, so we weren't pursuing policies that were consistent with a strong dollar. Just like if somebody cuts class and doesn't study, they're not, their study habits don't jive with their straight A policy. But somehow they would just expect to get A's anyway because that was their policy. So we were just expecting to have a strong dollar, even though our policies would result in a weak dollar. So even if we go back to the strong dollar policy, there's really no policy to go back to other than just, speaking about it, right? About the strong dollar. But I think that Trump and Bessent actually want a weak dollar. They want the dollar to stay as the reserve currency, just at a lower exchange rate, because they believe that a lower dollar would make the U.S. more competitive in international trade. That one of the reasons that we have these big trade deficits is because the dollar is overvalued, and that a lower dollar will help our global competitiveness. Now, the problem is, we've had a lower dollar in the past, and it didn't help. In fact, I think that a weaker dollar is actually going to backfire because it will make our imports more expensive, but we'll keep importing them because we don't produce an alternative. That's also going to be the problem with tariffs. And, Bessent is in favor of tariffs. I mean, obviously, that's probably a prerequisite. Although I think his approach may be a bit better than Trump's. I've read some stuff where he thinks they should be broad-based and not just targeted to any one country, and that maybe they should be introduced more slowly over time so that the markets could get used to them and prepare for them. So that would be a better approach. Of course, it'll raise less revenue for the government than the higher tariffs would, and therefore the deficits will be bigger because we're still going to get all of these spending, all these tax cuts rather, that are being advocated, which is going to make Bessent's job that much harder.